Meantime, the Treasury Secretary, as we've been talking about all morning long, Tim Geithner on Squawk today. Steve Leisman did the questioning. The one big headline, of course, surrounded the prospect of a default.
There's a lot happening as we try to work with leaders on both sides to try to bring people together to do something useful for the economy, do something useful about our long-term deficits. Very important, though, to have the leadership of the Republican Party definitively take default off the table. That's very encouraging.
How are they doing that? That's not the regular interpretation that everybody has of that other deal.
Well, publicly, each of them, Senator McConnell, Senator Kyle, Speaker Boehner, Majority Leader Cantor, have each said that default is not an option. And you saw Senator McConnell propose last week a mechanism for making clear that the U.S. will not default.
I want to bring in Bob McTeer, the former president of the Federal Reserve Bank of Dallas and a fellow at the U.S. National Center for Policy Analysis. And the man who got that interview, our own senior economics reporter, Steve Leisman, who did a great job in very little time. Guys, good morning to both of you. Bob, I guess the first question would be, what did you think of what he said? And did he really have many options coming out this morning the way he did?
Carl, I must say you're taller than I would have thought.
I get that a lot.
Finally,
I think I'm short, Bob. I think that's the problem.
Yeah, I already knew that, though. I've been seeing Carl seated all these years. I was pleased by the interview. It was a calming interview. I'm glad to hear that he was at the White House Saturday and Sunday working. I'm glad they're working behind the scenes. He seemed to have an agenda. The agenda of sort of pinning the Republicans down on taking the fault off the table. I agree with Steve. I didn't think that was so clear cut, but he seemed to be trying to put them in a position so that in order to mention default again, they'd be breaking what he termed their commitment.
Right. Steve, was your reaction the same?
Yeah, and I was just reading the transcript just a few minutes ago, and it's really interesting later on when I come back and I say, do you have a plan for what happens if the government debt ceiling were not to be raised? He goes, yeah, the plan is for the Congress to raise a debt ceiling. I said, so there's no plan? He goes, yeah, we have a plan. The plan is for Congress to raise the debt ceiling. Though he comes back to that. Bob McTeer is absolutely right. There was an agenda there. It's pinning the Republicans down on their words of, I have to go back and check all this. This is how he characterizes them, that they've taken default off the table, and to make it clear that there is no other option. So plan B is plan A.
Bob, in your view, though, I mean, isn't it safe to have a plan? And what would plan B look like in your view?
Well, I don't know what a plan B would be. I think it is good bargaining tactic for him not to have a plan B out there, because people might well gravitate to it. I think we really need to get the debt limit eliminated if possible, but to also get some significant spending cuts and some agreements about future spending cuts. I think that's essential. There won't be a very successful outcome if all they do is raise the debt limit with very little else.
Although it feels like that may be, in fact, what's happening, Bob, don't you think? I mean, are we all going to be singing with Mitch a week from now?
It does appear that way, and I wish they'd get that grand bargain back on the table, because we are letting a good crisis go to waste here.
Yeah, Carl, there was some commentary earlier, say about a month or two ago, which said exactly this, that the closer we get to the date, the more the hands of the deficit cutters are actually weakened. Whereas they thought their hand would be strengthened, it actually goes the other way for the reasons that Bob was talking about, and in fact for the reason the Treasury Secretary was talking about, the idea that if we can't get a deal, then all of a sudden we're facing default, then all you got to do is raise the ceiling and we'll worry about the debt another day, and that the crisis will go to waste.
Right. Bob, we have people on so many times, they're like, we're going to get the deal, we're going to get the deal, we're going to get the deal. Dow's down more than 100 today. S&P had a terrible week last week. At what point does the market really start to get sick to its stomach? Is that a thing that happens this Friday? Do we go all the way to the second, do you think?
Well, I'm amazed that the 10-year yield is below 3%. I don't quite understand that. I'm pleased by it. And I gather the negatives in the markets today probably have more to do with Europe than with the United States.
Hey, Carl?
Yeah.
I just want to chime in on a very contrarian theory about the 10-year. which is that, in fact, you might have people going into the 10-year as a result of breaching the debt ceiling. I know you guys have talked a little bit about that.
Yeah.
But if you think about the impact on stocks, it could actually be worse for the stock market than it could be for the debt for the fixed income market. So you might have people selling stocks and then parking their money in treasuries to wait out this crisis.
Would that be sort of an echo of what happened in Japan? All right, you lose your AAA, and yet your borrowing costs go down instead of up?
And you don't have to go to Japan as well, Carl, because it happened in the United States. Think about what happened to treasuries in the wake of our financial crisis. People bought treasuries.
Bob McTeer, I'm curious, from your standpoint, what do you think would be the safe haven of the world at this point? I mean, do you agree that it would still be U.S. Treasuries based on what you know in reality, what's going on with the debt ceiling, and based on what's going on in Europe?
Well, it's hard to imagine that the U.S. Treasuries would be a safe haven for a downgrade of U.S. Treasuries.
Right.
That really doesn't make a lot of sense. Right now, safe haven seems to be gold and the Swiss franc.
I think the Zimbabwean currency has depreciated about as much as possible at this point, guys. So I think there's a floor there.
Bob, I wanted to ask you about what Mohamed El-Erian, really zeroed in on from Geithner's interview, and that is the banks, that their interests are not aligned with the American economy. And if you read between the lines, it sounds like he's concerned about regulation. Can the Fed make the banks' interests be aligned with the American economy? How do you interpret those comments?
Well, I didn't hear exactly what he had to say, but I think they're reasonably well aligned with the American economy. The American economy needs more lending, and I'm sure the banks want to do more lending if they can find creditworthy borrowers in this weak economy. The banks are sitting on a pile of excess reserves. They have the resources to lend, but there's still a lot of uncertainty out there about bank capital levels and government actions, all this mess on foreclosures and the paperwork and so forth. So we need some lifting of the banker bashing, and we need some clarity on regulation, I think, for banks to start lending like they should.
Yeah. Melissa? A lot of the academic research has sort of concluded that at the end of the day, the banks will not internalize the potential systemic risks they create. And so therefore it becomes the job of the government to charge the banks for that. So that's a place where the apparent profit interests of the banks would seem to be at odds with those of the government.
All right, guys.
Steve, thank you. Bob, looking sharp in that seersucker today down in Dallas. I guess you can get away with that in Dallas, where it's probably hotter than it is here. Bob, thanks. And Steve, thanks again. Great stuff this morning.